us about the untapped market potential you see here. There's a lot of buzz around you, but the question is sustainability and how big this market can actually grow.
Absolutely. Well, the market is absolutely vast. Insurance runs into the trillions of dollars. It affects every household. And insurance companies often last for 100 or 200 years, which is pretty remarkable. So we see this as both an untapped and pretty much an unlimited market opportunity. And we've started with younger consumers typically, but we do run up and down the age bracket. And the nice thing is that those kind of consumers go through their normal life cycle events. So they start off as renters, but they become homeowners, and then they buy and engage in other activities that all require insurance.
Talk to us about your short and long-term ambitions here when it comes to renters versus homeowners and the domestic market versus the international market.
Our ambitions are expansive. The company is young. We're just marking our 3rd anniversary. But our ambitions are both global, so we expect to launch internationally as soon as the end of this year, which is unusual. Insurance companies typically stop at the water's edge, but we are looking at a global expansion. And yes, we're covering today homeowners and renters and condos, but Lemonade is an insurance carrier that is licensed to sell any kind of P&C insurance, property and casualty. So you can expect us to be expanding both in terms of the lines that we offer and in terms of the geographies that we cover.
Julie, of course, the competitors here are really traditional insurance companies. You know, who's to say they're not going to come in and Bigfoot with the resources that they already have?
Right. I mean, I think that question is still TBD a little bit, but there is this aspect of these companies are all very old, and like we've seen in a number of industries already, is that it's hard for these very old companies to just quickly innovate as fast as a company like Lemonade or another startup can. What you have seen them do, though, is start raising funds where they will go out and invest in different startups, do partnerships with different startups, and that can sort of give them a foot in the water and a way to combat some of this as well. And Dan, I sort of wanted to ask you as well on the reinsurance front. One thing that you guys have benefited from in terms of taking on these larger companies is reinsurance has had pretty good rates recently, and you guys have locked in some large deals, one with Berkshire Hathaway from Warren Buffett. What do you do? Do you expect those costs to remain low, and what do you do if they don't? Or is that something that you're concerned about?
So reinsurance does play a central role in our model, and in a fairly unconventional way. One of the pillars of Lemonade is behavioral economics, how to create an insurance company that isn't conflicted with its customers, that doesn't make money by denying claims, and thereby doesn't engender the kind of distrust that really plagues the entire industry. And reinsurance for us is part of the solution. So Lemonade takes a flat fee. If there's money left over at the end of the year, we give it back to charity, actually, to nonprofits of our customers' designation. And that means that we never have any kind of incentive to deny or delay claims. And if there's insufficient funds, then that's where the reinsurance kicks in. So our reinsurance partners are really cardinal partners in making this model of a new, unconflicted business model that speaks to consumers in general and to younger consumers in particular.
Got it. And one other thing, marketing-wise, you guys have had a lot of success in growing very quickly, which has gotten you a lot of big backers like SoftBank, Sequoia, and others. Your underwriting is something that you've said needs some work in the future, which isn't necessarily too surprising just because these large companies that have been around for almost a century have a lot of data on consumers where they can underwrite pretty well. Do you see that improving enough in the future where you will still be able to lock in these great reinsurance rates and have even potentially better underwriting than someone like an AIG?
I think that's exactly right. In fact, larger incumbents look at companies like Lemonade and they would like to mimic some of the technology that we've used or some of the marketing or messaging or the consumers that we're attracting. But I think that really is just a bit of the iceberg, the tip of the iceberg that's sticking up and is visible today. The 90% of the iceberg of the value that's being created, of the revolution or the transformation that is afoot, is in the data that is being created as a result of those delightful digital interactions. And what that means is that whereas traditional underwriting and traditional broker-based businesses will look at a group of maybe 1 million people and see them as a monolithic group because they've onboarded them using 20 data points, and at 20 data points, N equals 1 million or 10 million. When you get to a digital interaction with consumers and you get orders of magnitude more insight into them, you start getting into an n equals 1. You start being able to look at risks at a far, far, far higher degree of resolution, and ultimately become best in class in terms of underwriting and pricing risk. So what has started off as being cool marketing, fast growth, technology enabled, really ends up generating the 21st century incarnation of how to underwrite risk in a way that incumbents, because of their legacy, will have a hard time following.